Welcome to TradeTheMBA.com. This is John. This report is for the 22nd, and look at that, new highs as expected. No real shocks for any of this. I mean, we talked about even with this crazy day that any dip was still going to lead to an up move going in through the end of the year. Statistics bore it out, and so did the general rising. Long-term buyers here, not significant. I mean, we still need to be breaching this negative 7.5. But what we really have had is with the shorts under zero here, it's been a maintaining of no one really willing to attack it. And in that lack of a fade, we've had slow accumulation. Every time there's been available buying, it's just popped up just a little bit with consolidation, pop up, no real overbought. We got close to it when we had the last little pop, but pretty much stayed even. I mean, no real problems with the ES. It's actually doing much better than the NASDAQ. Now, we know the NASDAQ's problem. Some of it was related to some of the behavior before the election and choices they made, and some probably have suffered a little irrationally, but that should even out over time. They're all going to try and make up for whatever, but there are going to be some headwinds given the indications, and this was that whole policy thing. It's you bet one side and then you have to rotate. So that rotation has been where industrials, because you're talking about a potential of $1 trillion spending projects for infrastructure, and that's industrials are going to do very well with that kind of setup, and which is why they broke past the high points off that number 2 buy down here that we saw and have excelled. Now we're seeing here the beginnings of what would be a DOC spread as far as cyan breaking up above, but we get short-term buyers holding on in there and a continuation of long-term buyers. We've gotten way over the top. I mean, we passed 25 a little while ago, which would be the purple line, which would be right in here. I don't have it added on this one. You can always do that though. That would be just a matter of format, click, you go to inputs, and you can put on the warning line and top outline. So we have it at 0. We just change it to 1. And then that will pop up on the chart right there. Boom. Gives you the flexibility of having it there or not. But you can see whenever we reach that point, it isn't long before you get some type of a correction going into it. Now, from that standpoint, we better know what a correction looks like. And a correction is just going to take you back to even. But I would expect we're going to get to that 19 before all this is done, because that is just like the ES right now is already in pre-market. Up 8 should be just enough to at least get it intraday to break that 19,000 number. The euro, wouldn't say it's recovered. There's been a significant overplay of short interest, but the last time you've done that, you led to an even bigger cascade, and this is where I was talking about getting to parity at the particular point. I mean, if you're talking about almost 100% likelihood of increased rate hike in the U.S., some of that's already been baked in into this drop, but continued division within the Eurozone, French elections and where that's directed, certainly going to put additional pressure on the euro. Not to mention Brit exit, blah, 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 so on and so forth. And likewise, the easy short right here. And this has cost, what, $1 trillion already for bondholders. But we've been warning that they should have been out for some time now. But no, they were convinced of something completely different, the continuation of low growth and steady as you go, and that apple cart's about to get really messed up. Now, this is kind of ridiculous. OPEC talking about the potential of squeezing. This just talk. This is going to implode just as fast as it came up, already positive extreme. Fine, you're going to get a little short-term impetus, but again, as long as you have the ability of that U.S. spigot to open up at any point, you're going to get a momentary lag of a few weeks before they're able to fill in the void, and supply is going to go right back up. So it's fine to play. Little things, just from my viewpoint, these higher opportunities just become points to short as soon as we get intraday signals. So just keep that one in mind. There's nothing wonderful about that. There isn't going to be anything that's going to happen with gold, even with the potential of a slight rate increase. The reality is the market is still the place for money at this particular point, because you have the inverse effect of potential growth, which nobody has seen in 10 years. So 2007-8 was the last real growth period. And so here we had, from our ES standpoint, we turned green. We had a couple little pivots in there, those opportunities to add into the setup, and sure enough, continue to rise all off that. And they're overbought now, so there's going to be some backfilling into this pop here. Not a surprise, but even if we retrace this, usually what will happen is intraday, it'll try to get back to that, and we did reach that magical 22, as we talked about, on our way up to the eventual 2350. Whether that happens this year, unlikely. I think it's more likely to be next year, but put preconditions on those kinds of things, because like I said, what would happen at the end of the year, the people that positioned wrong and that have been mostly cash are now going to be chasing return, that the ES is starting to rise. And this is a story told over and over, year after year, where it ends up, this is why end of the year tends to get bullish, because people have made a mistake one way or another, and it's an opportunity for them to correct it. And so they've got to get caught up to the mean average, and that means they're chasing the situation. And that's what you got to do for window dressing. So that's where the realities are. As always, though, continue to look for me on the Skype chat. Keep posting these charts, but so far, clean sailing. Still holding on to the same position, just raising stops as we move along. That's all you can do. Trade well.